What's up, people? Good afternoon, good morning, good evening, traders, depending on where you're watching me from. All right, so just going to go straight to it today. Today's video is about the first red day. So the first red day is a day that if you can master this first red day, this signal day, come on, you'll just be chopping for the rest of your days. And don't forget this trading strategy, Stacy Brock's trading strategy. Check his channel out on YouTube. It is not one currency dependent. There's no, oh, I only like to trade this. If you want to trade and enjoy trading with this strategy, you have to trade all kinds of currencies, indices, commodities, and all. So you must have a basket of instruments that you'll be trading, like I have mine on my right hand side. And although it's still not all of them I trade, but majority of these currencies here I trade and indices. Okay, so let's just go into it, straight into it. The first red day. Alright, so first thing we need to know are the characteristics of a first red day. And these are very straightforward characteristics. There's no rocket science in this trading style at all, at all. So what are the characteristics of a first red day? Number one, it must have 2 days previous pump days. That's 2 days where price has pumped up. Could be Monday, Tuesday, and then your first red day might be Wednesday. It could be Tuesday, Wednesday. It can occur in any day at all. So number one, 2 to 3 days of pump days where price has been moving higher. So number two characteristics, this number two occurs on the day of the first red day, where price closes below the opening price of the day. So price opens, it trades upwards, then now closes below. That's the second characteristics we'll be looking for. Number three, day three, that's the day afterwards, is a sell at the high of the day or session open. Sell at the high of the day or session open. And the characteristics number four, the best trade happens 90% in the New York session. The best trade happens 90% in the New York session. So those are the characteristics. Very simple, no stress. Once you see it, you can unsee it, as they say it. So the first one, let me reiterate. 2 days of pump days, close below the opening price. Day three is sell high of day or session open. Day four, trade 90% in the New York session. Shikina. So if you look at the chart here, I've already labeled it. My annotations are already on the screen. So if you see, this Thursday, Friday were pump days, 2 days, between 2 to 3 days. This is 2 days, sometimes 1 day, depending on how price is moving. But this is 2 days of pump. From Thursday, first pump, Friday, second pump. Now the day itself, price opened here, traded upwards, created a higher high, and then came down to close below. So what this has done is that even done a break in structure. Break in structure is the same thing as change of character or market structure shift. All of them mean the same thing, but this is break in structure. This is the language we will be using in our one, and also here. So break in structure, price closes here at the bottom here. So the third day, this is where so this is our day one, so to speak. Day two here, day three, this is our third day, which is our trading day. So it's either happening at the high of the day or session open. And according to our characteristics, 90% of the good trades in this signal day happens in the New York session. Straightforward, no gra. This is the first one. Then we'll look at another example. Example 2, this is currently happening today. This is day 1 pump, day 2 pump. So these are 2 days of pump already. This is day 1, day 2. Opening price. Price traded upwards, came down, closed here, closing price. Okay, so this is today, this is happening right now. So what is our final? So our entry should be at the high of day or session open. And since this is Nasdaq, I would rather wait for New York session to open. We'll talk about entries later in later videos. But first of all, I just want us to know of these signal days, and also, so what I'll be expecting is at the open of New York, price should come down, or if price has already started coming down before New York opens, I'm expecting a pullback for the New York, then the price now goes down. That'll be the entry, but we'll be talking about entry later. So we're trading, we're selling at the high of day or session open. So that's what this strategy is all about. First red day. If you can master this first red day, it is everywhere on every chart, on every indices, on every commodity. If you look for it, you will find. It is a hunting. We have to always hunt down our setups every single day. So that's it for the first red day. We will check out the first green day in our next video. It's more or less the same thing flipped upside down. And also, if you can study this first red day, and before the first green day video comes out, just do the opposite of what's happening here, and you will see your first green day. Thank you very much. I will see you in the next video. Don't forget to like, comment, and subscribe. Peace.